Shut up and sit down.
Hello, real estate investors. Welcome to another episode of The Hard Truths with Scott Lurie. In studio today, August 24th. It's been a while. Today, we wanted to talk to everybody about credit. We're going to make this a pretty quick and to the point episode, I believe, but I know Scott's got his notes ready. Scott,
Yeah.
you ready to go?
Yes. What's up, Mike? How's everybody doing out there? Hope everyone has having a great summer. Sorry we were on a little hiatus. We got a little backlog with some life events.
What's the exciting news, though? Let's share that real quick.
Yeah, well, our lending business just received a $25 million credit facility, so we are continuing to expand our lending, and we will be talking about that in another episode, but we're really excited to share some information today about credit, and we're going to get into it. What do you think, Mike?
I'm ready. Let's do it.
Yeah, so credit, what does that mean, right? What is the purpose of talking about credit? Well, as an asset-based lender, we're not a credit-based lender, and so let me start by this one little notion that I had to use Google to look up who said it. And the thought is this: those who fail to learn from history are condemned to repeat it. And so what does that mean, right? And so, well, take Experian, TransUnion, Equifax, the three credit bureaus, and they are historians, right? Think about this in a really convoluted fashion, but they're historians, and what historians at the credit bureau are doing are looking at your ability, your history, your ability to A, pay your bills on time, B, pay your bills in general, and then C, your overall ability to be a financially sound person. That means, do you have any collection issues? Are you involved in litigation on money? Do you have other judgments against you from medical, whatever it might be?
Sure.
Credit cards is a big one. Utilities is another big one. And they take those factors and they create and derive what we know as a credit score today, right? And a credit score, traditionally, banks use a tri-merge, which is a merger of all three of those credit bureaus that gets you to a merged value of what your credit score is. And the lower your credit score, the more challenges you have in being successful in the game of money. And the higher your credit score, the more opportunity you have, so to speak.
And essentially that score is risk mitigation for the banks, right? Like that gives
I mean, it's the history. It's, remember, we started with those. So it says that if you have a high credit score, the history or your experiences in the past are that you pay your bills on time and you have a higher credit score. And so as a lender, people take that information and say, hey, you know something, this person's credit risk or their exposure to their ability to pay is low, or if the credit score is low, it's high risk. And that's kind of how that derives in terms of A, willingness to approve, and B, rate and term and all the other exciting stuff that happens in the world.
And banks, they always use credit score.
I don't know any bank that does not. I mean, every bank, every end lender, every financial institution that is a true financial institution that is taking a credit risk starts with, what is your credit score? It's the number one driver of question. And so we ask that question as a lender. I'm a lender, and I ask, well, what is your credit score? People put in the funniest answers, by the way. I wish you could read some of these applications because people are funny.
It is usually numbers, though. I will give them credit for that.
In tradition fashion, it is numbers. The interesting thing to think about, why are we talking about credit? Well, I want you as an investor to think about this. You don't get a chance to dispute your financial obligations other than in the court of law, right? So if you owe me money and I dispute that I paid you and blah, 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 and these disputes happen every day, and you can go down to the circuit courts and see all of them, that's a dispute. The unfortunate part is that somebody's not paid and somebody's harmed, right? And I've seen hundreds of instances is where people say, I paid them and they didn't. And I always say that doesn't make sense. Financial institutions are not in the business of stealing money from people, right? Utility companies are not in the business of stealing money from people. They perform a service, like your We Energy bill for us in Milwaukee. When We Energy sends you a bill, they've given you a service, which is traditionally your gas or electric, and you have an obligation to pay them. The downside is if you can't pay them, they give you a negative or a derogatory report back to the credit bureau, which can materially harm you.
Definitely.
And we see that all the time with people. We see this with tenants. We see this with other parties, is that when the going gets tough or times get tough, people don't pay their bills. And what they traditionally do is clam up into a shell, don't communicate. And when they clam up into a shell and don't communicate, they just get negatives and they get a collection bureau and then they ignore it and they say, screw it. And then they move on. And then 3 years later, they say, okay, I'm back on my feet. I want to move forward.
Yep.
And then you get your punch in the teeth, right? And you're like, wait a second, my credit score is what?
Because how hard, once you go down that hole, right? How hard is it to climb back out?
It's not impossible, so understand that, but it's really difficult. You set yourself up for failure before you set yourself up for success. And so the reason that we're talking about credit today, guys, is I want you to really understand that at an age of 18, when you establish yourself with the credit bureau, you do this naturally by having a social security number and turning 18. You have a credit score. And the reason I say it is most people do a lot of dumb things when they're kids, including 18-year-olds and 20-year-olds, and a lot of adults do dumb things every day. But my point of saying this is you have to value, it's critical that you value your obligation to somebody. And what does that mean? Well, if you don't agree with something, ignoring it and not paying it materially harms you. If you are in dispute, it materially harms you. The disputes traditionally are always won by the person who's owed the money. It's just the way it works. There's contracts in place. There's fine print all over the place. You traditionally don't have a chance. And so my point in discussing credit today is the following. Be sure and be careful for what you sign up for. If you sign up for a credit card, make sure you pay the bill. If you sign up for a utility bill, make sure you're getting the bill. I get these traditional excuses happen all the time. Well, I moved out of the place. I didn't get the bill. Stop right there. The onus is on you. Yep. The United States Postal Service has a forwarding address for $1 you do online, and you can get your mail sent to you. So the system doesn't have any excuses. The system doesn't have any ambiguity. It's a black and white system. It has no emotions. It has no feelings, unfortunately.
And that's that's the negative side of it, right? But you have to have the credit, right? You got to do some things to build it up.
To get to the good side of it, right? And so I always would encourage, so let's just talk about the negative for 2 minutes and then we'll talk about the positive, because I think you're right, Mike. The negative is if you move out of an apartment and you move from Milwaukee to San Diego and you don't pay your last We Energy bill and you don't forward your address to them and you don't realize that you owe them $300 on your last bill and you leave for a year and they've attempted to call you, they've flagged you for a no pay for 30 days, a no pay for 60 days, a no pay for 90 days, they've flagged you for collections, and then they flagged you for a judgment, your credit score could go from 750 to 580 really quickly.
And $300, I mean, again, but it might not even be consequential to you.
It can be $250. It can be $50. It doesn't matter. Yeah. They don't care. Once again, it's a derogatory statement that says that you did not pay your bill, right? Yeah. Now, this story goes, well, I moved to San Diego. No one cares. I didn't forward my mail. Burden on you. And I didn't pay the bill. And now what do you end up doing? So here's the solution that pisses me off the most. So that 750 credit score person now comes back to Milwaukee to invest in real estate because the market's great. We want to invest. They go to pull their credit. The credit's 580. They've got a judgment suit from We Energies for $300. We Energies has won. And you know what that person does? They pay it.
Yeah, because again,
they have no choice, but they're going to pay the debt anyways. So then they go and pay it. They're at a 580, and for the next 12 months or 18 months, they're working on rebuilding their credit score. Yep. And during that time, they're materially harmed. They might lose interest. They might be affected. So my point to you is find a solution, find a system, Find a process that you know every obligation you're signed up for and make sure you pay it. If you co-sign on your sister's car and she doesn't pay it, you're paying it. And if you don't want to pay it, don't co-sign on it. If you're living in an apartment with 2 people and you're the one that wants to take the We Energy bill and they don't pay you their half, guess what? You pay it because it's on you. You can deal with them. My point in saying it is that there's so many convenient excuses. The problem is the credit bureau system doesn't have emotions. It works on numbers and manipulation of yes or no's. Yes, you paid. No, you didn't. There isn't a, I didn't pay, but that doesn't get you an extra half. You don't get 50% credit for that. So my point to saying that to you real estate investors or you investors is credit is important. It's not important in our asset-based lending world. It is important in our world, but not a key indicator of it. But when you go to be successful after us, when you buy a property and you want to execute the burst strategy, when you buy a property and you want to refinance into long-term debt, when you are looking to step up from I'm fixing and flipping houses, now I want to buy an 8-family or a 16-family or 32 unit, and you want to go to a bank and get debt, the first thing they're going to ask you is your credit bureau. What is your credit score? And the second thing they're going to do is go and pull it, and they're going to figure it out. So the reason I say this to you is figure out what your obligations are today, figure out what they are tomorrow, but don't make a mistake with credit because of the pointing of the fingers or whatever it is. Your solution, your easiest solution is pay the bill, and then once you pay the bill, you can dispute it with whoever you want. It's easy for them to give you a credit. Once again, they're not here to steal your money. They just want to be paid what they're owed. But it's the same thing with a tenant, your co-tenant, right? Oh, he owed me $50. I'm not paying you. I didn't you brushed your teeth 12 times and I only brushed them 4. Okay, you guys can figure that out in the playpen, but don't figure it out in the financial world because you're going to be harmed and your credit score is going to be harmed and you're not going to be in a position of success. I hope that makes sense to everybody. Now,
I think it does.
Okay, good. Now, the one thing that you mentioned, Mike, which I think is pretty cool, is that we have to talk about, well, what can you do to better your credit score, right? How do you establish credit? And that's through establishing credit, trade lines. If you have no credit, I don't have any credit, I pay cash for everything, and that's the way my life is, that's fine. You can live your life like that. But you need to establish credit to get to the next level. And if you look at our leverage video, and if you look at the concept of leveraging and how you're going to go ahead and make this happen, you need to establish credit. So what are a couple of ways you can establish credit? Well, you can buy a car and finance it and make sure you make your monthly payments. Every month you make your payment, you get a star. Like you're in 4th grade. Good job, Rusty. You passed the first step. And you get a little star. Okay, then you go do it second month. And after you have 12 months, you have 12 months of history of payment, your credit score is going to go up a little bit. How cool is that? Very cool. Now, think about it from another standpoint. If you also wanted to get a credit card and you said, I only want to put gas on it when I go to the gas station, that's fine too. That's great. So when you go to the gas station, you put your credit on it, you put your car on it for $40 or $60 or whatever gas is today in this world that we live in. Maybe it's $100. And then when you get the bill, pay the bill in full. That means, once again, now you have 2 trades that are showing your credits there. If
you gotta pay that bill.
You have to pay it.
Yeah.
If you don't pay it, then if you're taking out credit and you're not paying it, you're harming yourself. What we're talking about is a ways to not harm yourself. And that to me is what's going to be important in how we operate. So to recap, establishing credit lines, you can buy a house, that's a credit line. You can get a credit card. That's a credit line. You can get a car payment. That's a credit line. A lease is the same thing as a car payment, by the way. If you want to buy or lease, it's the same thing. It's a credit bureau trade line that shows the exact same thing. And so establishing 3, 4, 5, 7 credit trade lines is important to build your credit. But don't make a mistake. Don't establish credit lines or credit trades if you're not planning on paying them, because it will materially and adversely harm you in getting a good credit score. Now, what happens if you get a good credit score or when you earn a good credit score? Well, you receive better interest rates from end lenders. You are less risky to them, so they're more inclined to do business with you. And you really get a seat at the table when you're discussing growing your business. Imagine this. I want to grow my business. My history has been, I never pay you back. Do you want to do business with me? Or, hey, how are you? My history has said that I pay you back. I'm a good person because of my ability to pay you back. Because once again, remember, there's no emotions. They don't care if you're good or bad. They just want to know, are you going to pay me or not? It's very simple, black and white. And so going down that process is relatively important, and it will help you. It will give you more credit. You can extend yourself into having larger amounts of credit. You can do a lot more with it. And so my vision, my goal for you is to have the highest credit score you can obtain, so you can continue to follow your real estate dreams. And for me, it was the buy and hold strategy, right? I bought, I renovated, and then I refinanced to hold the assets, and I still hold a lot of my own assets. But my goal of doing that was really contingent on me. My number one importance is making sure that I've got a good credit score.
So just a quick question on that.
Yep.
Because like you said, we don't necessarily focus on the credit score, but when you refinance out, right, when you go into traditional lending, they do look at the credit score.
100%.
What kind of score are we looking at in terms of, like, you know, where's our minimum level at that a traditional bank, or, you know, even some of like the private sector long-term financing, you know, where do we need our investors to have that score at?
Yeah, so that's a great question, Mike. But think about it like this: there's a home for everybody, right? And so there's lenders that'll take higher risk long-term debt, and there's some that won't. And so, you know, I would say the minimum of a 620 credit score, and that's the bare minimum. I think that the goals for everybody who's listening to this podcast should be a 700 plus credit score. The really good credit is 740 plus. All of it's obtainable, though. It really is. You just have to obtain what you're after. And so.
And how do they check it?
Yeah, so I pay a service every month. I use American Express Credit Secure. I pay $16.99 a month.
Okay.
That's a little bit of an insurance policy, and I pay $16.99, and it tells me my credit report. I can pull it every week. It tells me when I get a new inquiry, which we're going to talk about in one more second as a closing remark. It tells me when there's usage up or down. It's a very helpful $17 a month, and it's really important because as I said, my exit is really contingent on my ability to be successful, and my ability to be successful outside of my world is my credit score, right? It's like my little flag. Hey, how you doing? And you flash like an 800 over there, and guy across the street bobs a 780, and you're like, hey, you know what I mean? It's your flex point. But when you go to a borrower, when you're a borrower going to a lender, and you're like, hey, I got a 780 credit score, you guys are talking. The door is open. One thing to consider also is you know, how do you get a negative credit score? Well, inquiries can harm you. And so if you're out there shopping around for credit, hey, I want to go get a credit here, and I want to get credit here, and I want to get credit here. I want to buy a car. I want to go buy a credit card. I want to go buy some clothes at the Gap, and then I'm going to. Is the Gap still around? The Gap, that clothing brand? Yeah. So you go to the Gap. They always say, do you want to open up a credit card? And you save 25%. Oh, sure, I'll open one of those. And then you open up all these credit scores. Your credit score goes down based on inquiry. So apply for meaningful credit. Be smart. When people are asking you to do something, it's because they're selling you something. But as real estate investors, owning and having a great credit score is not the key, but it's a key to your success as you go forward. And so I wanted to take a very short time on this podcast just to talk about credit. If you have any questions about credit or want to discuss credit with me, I'm available. Mike, thanks for putting this together for us today. I hope that's a little helpful workshop on credit. If you have bad credit, the nice part is you can fix it. It just takes time and effort, but you got to start today.
Yeah, look at your bank account. A lot of
Wells Fargo provides it to us as well.
I know Chase does as well, too. So
they're all providing it.
There's ways to check it. There's ways to make sure that you're on top of it.
Yep.
And, if you have questions, please email us, message us, call us. Do what you have to reach out. We're always here. And thanks, Scott. I appreciate it.
Thanks, Mike. Talk soon. Take care, guys. Happy investing.
Shut up and sit down.